Hello. This is Belisle with another weekly profit maximizing tip. Hope you're having a great day. I'm a CPA in El Paso right now. We're busy with year-end tax planning, so if you don't like your tax bill from last year, this is the time to work on it. Anyways, what we're going to talk about today is the real reason why you're probably not as profitable as you think you should be. I mean, I've talked to many owners who are. It's a kind of a common complaint I get. I'm working harder, making less. I'm selling more, making not making a lot more. Um, that's because they believe the problem is just sell more, cut expenses. It's not really there. Look, I've been working with small business owners almost 50 years, well over 40. Okay. And even in my own business, increasing revenue doesn't necessarily increase sales. It's simple as that. So I want to walk through what I see every week and I mean, I literally had this discussion this morning. Sales is important. I mean, without sales, I don't have a business. Okay. But if I don't do the right sales with the right profit margin, then I'm not making money. I mean, can't just sell to sell. I got to sell to make a profit. The most important number in your business is the bottom line, the net profit. Second most is your gross profit, which is really going to be your sales minus the cost of your product minus labor to get the product delivered. So it's really, but still, I just made it sound like a math problem. It really isn't. It's about behavior. All right. Your numbers reflect the decisions you make. When you're stressed and overwhelmed and in a hurry, we tend to make very emotional decisions rather than decisions that are based on facts. Okay. Profit suffers. Every business, your profits are going to suffer if you're not making fact-based decisions. All right. And making decisions truthfully. Another thing I discovered with myself, if I'm not working on things that I want to do, that I enjoy doing, or selling products I believe in, or services I believe in, I'm not going to sell them. I'm going to sabotage myself on that. So, first thing you need to do, stop, back up, take some time, analyze what you're doing. All right. That's when I sat down and said, and we go, okay, I tell people we do two things. We help them make more money and keep more from the IRS. Okay. It took me a long time to go, well, if I'm not doing those two things and I'm working on a bunch of other crap, I'm not getting to those two things that I'm telling people I'm doing. Well, bookkeeping doesn't have anything to do with that. And there's people out there that love doing bookkeeping. I don't. And they can, they can do that all day and do it cheaper than I'm willing to do it for. I don't do payroll returns. Why compete with ADP or Paycheck or, companies that take over the whole payroll rate, even QuickBooks payroll. Why would I mess with that? All right. So what is it that you need to do? Well, there's a few things you need to do, and I already told you one of them. What is it that you make the most money on? Well, how do you know that? Well, the first thing you need to do, and I would narrow down to three things that are keeping most businesses from being as profitable as they could be. First, they don't know their numbers. They don't look at them often enough. They don't notice the profit leaks, the expenses that are going out every month. They don't notice that they have 6 subscriptions that they no longer use. Yeah, it doesn't sound like a lot. It's $200-300. All right. They don't notice shifts. We had that looking right now. We're looking at it for a restaurant bar. I put the spreadsheet together using their point of sale so they can start looking. All right, what's our food margins? What's our alcohol margins? And do it monthly so that you can start to see, do I need to start looking at my prices? Do I need to start looking at finding a different supplier to get a better cost? Because let's be honest, if you're not looking at your numbers, you can't manage them. As simple as that. So we're looking at 70, 60, 70, 70 to 80%, anywhere from, with labor and cost of goods sold, anywhere from 50 to 70% is normal that I'm going to see. It's your biggest numbers. Yeah, I want to look at those subscriptions I talked about earlier, but I also need to look at my gross margin. That's really where my problem is. And look, waiting for me to tell you when I do your tax return in March, April, May, with extensions, September, October, that you had a bad year the year before, way too late. I mean, I used the example that I had where we're doing quarterly financial statements and I'm looking at it and I'm saying, here's this one area. All of a sudden your sales dropped. Why? And, they didn't notice it right off the bat because there's, quite a few employees between them and that and they just didn't see it right away. But they were able to go out and find out that the person that was buying from them decided to buy from, they had a different person buying. It's a large company, so they have a purchasing agent who's buying it from a friend. So they went back in and went to the owner and resold it and got that back. Well, they were able to do that in the first couple of months. They noticed it was down rather than 14 months later when it's too late. Okay. But that's a matter of looking at your numbers. The second thing is you're guessing instead of using data. Owners, we love to say, well, I know my business, so I'm going to rely on a gut feeling. Yeah, maybe. You know, it's the same with me. I mean, bookkeeping, I was looking at it going, oh, yeah, it's going to cost me $80,000 in billing if I get rid of it. Well, when I analyze it and look at my time, owners, the most valuable commodity in any business is the owner's time. And my time was being spent managing the bookkeeping rather than going to clients or upselling to customers, the old 80-20 rule, spending your time selling to your best customers. So yeah, I dropped 80,000 off the top line, bottom line went up 40,000, and I worked less hassles, less hard. So again, you don't make that decision without numbers. All right. Also, in a retail setting or a wholesale setting, which products do you make the most on? Even in a restaurant, which plates do I have the highest profit margin on? And you find out you're pushing the items, you're promoting the items that you don't make a big profit on, and you don't promote the ones that do. Why do you think if you go to a restaurant, they're always asking you, do you want dessert? They push that. And do you want a drink with that? Because, yeah, you can have water and a soft drink, but if you order a mixed drink or a beer, you're going to pay a higher margin. Their profit margins go up. If you have dessert, the profit margin is much higher. Okay. Again, same kind of thing you can use. How can I look at what I'm making the most profit on and push that? Okay. And again, it's the idea of getting the average sales price to be higher, the average sales amount per transaction to be higher. McDonald's, we all make fun of them. Do you want fries with that? But that's huge because the customer's already there. You already done the marketing. It's what it took to get them in there. And until you actually now taking that sale from $4 to $6, whatever. I'm just using numbers. Well, I just did a 50% increase just by asking, do you want fries with that? Now, the numbers may not be exact, but you're getting the idea. Now, it doesn't sound like a lot, but if I do that for all my customers and I get 2/3 or 40, 50% to do that, I've had a big increase without spending any more in marketing, people, or anything. All right. Remember, you want to know your margins. You want to know your break evens. You need to know cash flow. I was meeting with a client. This is a typical problem. Their financial statements on a cash flow basis, in other words, what I receive this year, showed a profit. But on an accrual basis, what I actually invoiced this year showed a loss. How's that possible? Well, I had a big year in 2024, which a good chunk of the collections happened in 2025. So it hid the fact that my sales were actually dropping and my profit margins were dropping because my cost and my margins were low. That's going to create a problem for 26. All right, if they don't address it. So that's why we're going to meet with them in January. We're going to actually help them create a cash flow budget so that they can make sure they're not going to have problems. Well, a couple things. First of all, by looking at your numbers and then understanding your cash flow position by doing some proper budgeting, knowing your break-even point, how many units do I need to sell per month? What we're trying to identify is, hey, if I don't do anything, I'm going to have a cash flow crunch in 6 months. If I don't change something, if I don't sell something different, if I don't increase sales, if I don't reduce staff, if I don't put a line of credit in. But it's better to know that 6 months in advance and have time to react than it is to sit there and go, oh, hell, I'm out of cash. Excuse me. The final thing is always, and I touched on it already, but I'm going to say it again because it's this important, thinking sales equals profits. Looking and focusing on increasing revenue without really working on what you need to be focusing on is increasing profit, not sales. Sales, yeah, I want to increase sales, but I want to increase profitable sales. That's why when I'm working with a client, we start by first looking at improving their gross profit, improving their efficiencies, improving a lot of parts of the sales cycle, the cash conversion cycle, as I call it, and then looking to ways to increase sales. Because if I can increase my gross profit, instead of making 20 cents for every dollar that I sell, I'm just making 40 cents for every dollar I sell. Now I'm ready to double sales, and because now I can see it translate through. All right. So what that means, I mean, you need to have a mindset shift. All right. Stop thinking like a worker. Remember, you're an owner. An owner cares about profits, doesn't care about sales, doesn't care about hitting a quota. Okay. Your job isn't to put up fires all day. That's what it is now. But you need to figure out, well, you need to change that. You need to figure out where your business is going. And I do that usually by telling my clients, keep track of everything you've done for the last 2 weeks, and then decide, would I pay whatever you're paying yourself or what you should be paying yourself. Divide that by 2,000 hours, roughly 1,500, whatever you want to work. And it comes out to, let's say, $100 an hour. Would I pay somebody $100 an hour to do what I just did? If the answer is no, delegate it, eliminate it, outsource it. Simple as that. Get back to the basics. I wish I'd done that earlier, quicker. Okay. Your job, remember, is to decide where the business is going and where to get the best customers. I mean, really, it's simple as this: to get good customers that buy from you consistently at a profitable way. And that's your job, and to deliver. Owners think strategically. The owners that think strategically and have a plan always make more money. We're going to be doing the 90-day profit reset. We're already in the process of doing it. So pay attention. In January, we're going to be doing it at the end of February, and then putting our 13-week course together. But following that is more important, really, in my opinion, which is the annual profit plan, where and notice what I said, annual profit plan, not an annual sales plan, because I'm not in business to take in thousands of dollars with my left hand and pay out thousands of dollars with my right hand and hope a few pennies stay. That's not what you want to do. I mean, I got a client we met with today, actually downsized his business and is making more money. Why? Because he's being selective. He's only taking the ones that have a good profit margin. All right. So let's summarize a little bit. Mindset is important. You need to shift into a leadership role as you're the profit master. That's your job. Your job is to ensure the profit in the business. A business that's more profitable is you get better employees. You're able to attract them. You're able to keep them because you can pay them better. You can put benefits in. So you have more continuality with your employees. You're also able to support yourself and, take vacations more. It's just more fun to be in a business profitable, and it's less stress. A business is struggling is stressful. We all have been there, and at one time or another, every business owner's been there. But remember what I tell my clients, and I remind myself, I have to look in the mirror and tell myself, you created this mess. You created this monster. So fix it. Change what you don't like. All right. So let's summarize a minute. What's the most common profit leaks? Underpricing your products, underpricing your work. If you can't change your pricing, then change the add-ons. You can always change things. That, to me, that's just an excuse. There's always a way. I've never worked with anybody that we couldn't figure out a way to do it. All right. Allowing expenses to creep and not noticing it. Now, sometimes you can't do anything about it. Insurance has been something this year that's been a bugaboo with a lot of my clients because it's just been increased. Yeah, there's some, but people accept it rather than saying, what is the insurance supposed to do? It's supposed to cover the catastrophic. So control your costs, raise your deductible, because you can control, if I had an accident and I needed $10,000, I can cover that, but I can't cover a $250,000 hospital stay. So, but why pay for the insurance for the first dollar? Pay for anything above what I'm comfortable paying out of pocket if I have to. All right. You can control everything if you think about it. All right. Not collecting receivables is huge. It's one of the biggest things I see people get in trouble. It's not officially a sale until the money's in the bank. I mean, yes, accounting wise, we had this discussion this morning. For accounting purposes, when I deliver the product or the service or the whatever I'm doing, it's a sale at that point. But in your mind, you should not consider it a sale until you've collected it. So collect your receivables. Saying yes to unprofitable clients is something I'm guilty of, not firing the ones that are if you have clients. So you shouldn't, if you're selling, that's not, well, I don't say, yeah, but you're thinking about discounting. And if you've got my book, you see, I don't believe in discounting unless it's for a specific purpose to get a customer, to get a new customer in order to, or to get a referral, in order to build up the life, because of the lifetime value of a customer, which is beyond this video right now. Not tracking your margins. You should know your margins of every product and every service you do. What does it cost me? What if I'm selling it for $100? What's my true cost? All right. If you don't know that, and truthfully, every one of those things are pretty easy to fix. Okay. Look, what you need to do, simple as this: review your financials every month. Get with your CPA and have them explain it to you. I just did this yesterday. I'm going to do it more often now that I'm hiring another CPA, so I can go out and talk to my clients more and teach them what is it you need to look at. And really, you're looking at gross margin, overhead, and cash flow. Because without cash, man, you lose cash, you're out of business. Do a short meeting with yourself to review the past week and see what you could change, or at least the past month. I would do it weekly, but at least monthly. What went right? What went wrong? And what should I change? How can I make a difference? If I just did a 2% increase in profits every month, that multiplies, it compounds. It's like, I forget the number, but it's like 136% increase, or 126%, whatever the heck it is, increase in profits in a 12 to 18 month period. Can't remember. All I need to do is look for things to make myself 2% more profitable every month, and do that consistently. And you have a huge choice. All right. And then get in the habit of asking the decision: did the choices that I do this today, all right, or the choice I'm about to make, will it increase profit or not? All right. Trust me, that by itself will actually work. Look, first thing, being a profit is a weird word, but it's not perfection. It's about being aware. Okay. It's about being aware how it affects your bottom line or your gross margin. Okay. Or that's why I put the 90-day profit reset together, because most business owners are so close to being profitable. They just need to fix the leaks. They need to improve a few things. And I got the book, the course we're going to do. I'm really excited about doing it because I've been wanting to do it for 5-6 years. I've just been so busy now that I'm hiring another CPA to come in and help me. That was the main reason I'm doing it, was so that I'd have time to actually help my business owners, because most business owners are very close to being super profitable. They just need to do a few tweaks. All right. And that's huge. And truthfully, think about it. You just don't need the stress of, how am I going to make payroll? I got to pay rent. You're always going to have that stress, but to a degree. But having the money in the bank takes that stress away. All right. Yeah, I didn't collect as much as I should have this week because your business is seasonal, but I have a savings account built up. So that's another thing that we need to talk about. Look, here's what you need to do. The next steps are pretty simple. Review your numbers, ask for help, take our course when we get ready to do it. Trust me, it's going to be a very low cost way than hiring a consultant to come in. And I love these, what I call hit and run consultants, come in and take $30,000, $40,000, $50,000 and give you basically an MBA manual and then disappear. Yeah, no. You need to be your profit coach. Yeah, sure. Get help. Get somebody like, yeah, I do this. So get me to sit in with you once a month, once a quarter, twice a year, whatever, and tell you what I see. That's basically the meeting I had this morning. This is what I'm seeing. All right. This is where we need to look. This is what watch out for this. We need to control this. Tax planning. Everybody thinks, oh, I'm just going to pay my taxes, whatever it is. Yeah. I mean, even the one I did just at noon today. Yeah, we didn't save them a heck of a lot. It was $15,000, $16,000. You want to pay the IRS $15,000, $16,000 more than you need to? And we could have cut it more, but we were making life decisions that he didn't want to do some things, but we showed him the different scenarios. So, do that. There's so much more, but really ask for help. Watch this again. I've covered a lot in here. Pick up the book. Always spend some time, spend 4 hours a week. This is what I try to get my business owners to do. Spend 4 hours a week improving your business. All right. If you do that for 50 weeks, because I'm going to give you 2 weeks off, you don't have to do it. Plus, it makes the math easier. Okay. That's 200 hours a year that you spent on improving your business. I guarantee you very few of your competitors are actually doing that. So think about that. And if you don't know how to spend it, look for our course. Yeah, I'll help you with that. I'll be happy to work with anybody who wants to work closely with me on that. Hey, until next time, this is Wayne Belisle saying, let's make this our most profitable year ever, especially in 2026. The rest, there's not much left to 2025. Let's make a commitment to 2026 that we're going to take the stress away. We're going to run it profitably, and we're going to grow our business so that we take the stress away from us. Hey, until next time, this is Wayne Belisle saying, have a great weekend. God bless. And see you in church. Take care. Bye.